G'day guys, welcome back to the Devon Too Good Investing channel. Today we're going to be looking into A2 Milk's full year 2021 earnings. So A2 Milk's earnings, they dropped their earnings on Thursday morning, just before the open. And as you can see, from Wednesday at the close, from pretty much to today, A2 Milk are down 15.41%. So today we're going to look through the earnings and we're going to try to figure out if this sell-off is justified, and we're going to have a look into the earnings to see what are the prospects for A2 Milk going forward. So if we jump over now to the earnings presentation, we're going to first see the first number that sticks out right to me straight away is revenue down 30.3% to $1.21 billion, as well as EBITDA down 77.6% to $123 million, but this includes the stock write-down and Mataura Valley Milk acquisition costs. We can also see this EBITDA margin is also quite low compared to where A2 Milk has been historically. And in the end, they had a net profit after tax down just under 80%, and they pumped out a net profit after tax of $80.7 million. Man, oh man, oh man. Well, it's pretty disappointing, I'm not going to lie, but it was pretty much what we expected. And this has mainly happened due to two main reasons. And I think the biggest reason is obviously because the Daigou trade has been pretty much non-existent during the last sort of year and a half, ever since COVID's kicked off in Australia, closed their borders. Pretty much Chinese students, Chinese tourists, they can't come into the country right now, so they can't send any products back home. So this has pretty much killed off that sort of retail Daigou channel. But I guess the question we're going to ask ourselves is this going to be a long-term event, or is this going to be a short-term event? And we're going to kind of dive into that as we go through these earnings here. And then the second sort of thing that was really hurting A2 Milk was they had too much inventory and they had to write a lot of their baby formula down, which obviously is going to hurt their bottom line. They were pretty much doing this to ensure the products that they are selling onto customers is fresh. However, they're not making money on this product as they are destroying it. So as we already know, A2 Milk pretty much have a new management team. We got David Bortolussi as CEO, and they've also brought in a bunch of executive leadership members to sort of flesh out their leadership team once again. Management claimed that overall brand metrics remain strong, and hopefully these will continue to remain strong for the sake of A2 Milk. So it is good to see that A2 Milk are starting to improve on their inventory. So we can see that their inventory at the end of the year was $112.2 million, and this reflected the impact of stock write-downs. So we are now starting to see an improvement in age of stock being sold to customers in both the Chinese and the English label. I think it is quite important that we are selling fresh products to the to the customers, because A2 Milk is meant to be a premium brand, and it will damage the brand in the long term if we sell this sort of older stock to customers. One thing that I do have to commend A2 Milk on is their pretty stellar balance sheet. We can see, despite through all this hardship, A2's Milk cash on hand actually grew $21 million over the year to $875.2 million of cash in hand. Now, Charlie Munger once said in one of his interviews that a company can't go bankrupt if they don't have debt and they've got cash on the balance sheet. And that is one thing that I'm not really worried about A2 Milk, is that I'd say they've got a pretty much a zero chance, maybe a 1% chance of going bankrupt. But of course, A2 Milk is a growth story and it's not all about the balance sheet. And as we can see here, the management are explaining that the China infant nutrition market structure is changing rapidly, and They say that the overall infant nutrition market in China decreased in volume during the full year of 2021, driven by a reduction in birth rates, particularly in early stage products. And what's interesting about this is, yes, the birth rates might be decreasing, but what about all those people coming from sort of poverty into the middle class within China? And how I wonder how that offsets the reducing birth rate, especially because A2 milk is such a premium product. I'd imagine people who are in poverty won't be able to afford A2 milk baby powder. However, as these people sort of move out of that and enter the working class or the middle class, this might offset that decreasing birth rate in China. Now, I'm not that concerned about the birth rates. I believe that the middle class, or the uprise of the middle class in China, will outweigh the reduction in birth rates. However, what I am concerned about is this overall sort of shift from cross-border to domestic China channels, and the fact that local players are continuing to gain share against traditional multinational brands. So if you think about back to when A2 milk sort of first became on the scene, they really capitalized off the Chinese distrust to their local players. But it seems that this sort of distrust is starting to fade over time, and this is hurting A2 milk's brand by the looks of things. And where this distrust sort of originated was when they had the local companies putting rubbish into their baby powder, and it unfortunately caused a lot of babies to get sick. Unfortunately, there were some babies that got cancer and other sorts of horrible things as a result of poor quality Chinese products. And that was why there was a large sort of shift back then into wanting products like A2 milk or products that came from overseas, because the Chinese didn't trust their local products. But it looks like this might be starting to change and the sentiment might be shifting. Now, if we have a look at the China infant nutrition growth in FY 2021, we'll see that the China label increased at 15.4%, up to 390 million. And I suppose the concerning thing out of this is, we saw nice growth year over year for the first half of the year. Then we can see some really sort of, backwards growth in the second half of the year. But the management justified this by saying it's reflective in the substantial uplift in the prior period due to COVID-19 related pantry stocking, the decreased birth rates, and increased competition from domestic brands. Well, as I said, I think this will be cancelled out by the growing middle class. And in terms of increased competition from domestic brands, this is something that I am concerned about. And then this COVID-19 related pantry stocking, that should be a temporary thing. Well, as long as A2 milk managed their inventory correctly, then this will be a one-off thing. But moving forward, they're going to look to invest a lot of money into marketing, and in particular their growth initiatives in China to try to get their product in front of more people and drive this growth into the future. And I really do think that this is probably the most important part of A2 Milk's business now, is this China label, especially if the Daigou channel is really slow to come back, or just plain and simple doesn't come back. This China label is going to drive their growth in the future, I believe. We can see that A2 Milk are continuing to expand their store footprint into China. They've got 22.8k stores. And we can also still see that their overall market share is still increasing. And this is in mother-baby stores. It is starting to slow down, and hopefully we don't see this turn back over. But I think that this will continue to grow, or at the minimum stay flat, as long as A2 Milk focus on making sure they manage the inventory correctly. So as we can see, the English label, it did drop significantly. The Daigou/reseller channel dropped 52.1%, and the CBEC channel, the cross-border e-commerce, that was down 51.1%. And this is obviously due to COVID-19 as well as inventory issues, but mainly due to COVID-19 and no one really sending A2 Milk products back to China. And to go along with the huge drop in revenue, the English label channels also lost market share in the CBEC and Daigou channel. And we can see that it drops quite significantly, particularly in the Daigou channel, but fairly significantly also in the English label channel. After all these years of market share growth, it is quite disappointing to see, but it's no real big surprise. However, despite the poor English label performance, the ANZ liquid milk category grew quite strongly, with revenue up 10.8% year over year. Now, this is historically it's been the slower growing aspect of the A2 Milk business, but I think this is quite positive as it does show that the A2 Milk brand, at least in the liquid milk category, is still strong, and we can see it has gained quite a bit of market share over the last year. It is nice to see these revenues growing, and this does sort of give me confidence that the A2 Milk brand might be intact, though it more matters what the Chinese think rather than what the Australians think, as it is the Chinese that consume the most A2 Milk products, particularly in the baby formula category. So finally, the management team have given us some outlook. They are confident in the underlying fundamentals in the business, and they are positive about growth in the long term. They don't want to provide any guidance for the short term. This is something that it's probably a good thing after all those guidance downgrades that they gave, and it just beat up investor confidence, especially in those larger sort of hedge funds. Yeah, we can see here that they expect uncertainty. That's fair enough. No one really knows when the border is going to reopen, and honestly, I can't see this getting much better for A2 Milk until the borders open, or maybe multi-years down the line if they're able to grow that China label into something more substantial. But anyway, guys, that's it for this video. Hope you enjoyed it. Hit the like button, subscribe, and I'll see you in the next one. See ya.